Good evening, this is Nick Inman from VolumeProfileTrader.com on Saturday, January 21st, and we're going to look at the S&P, NASDAQ, the Dow, and then the sectors because, generally speaking, when there's a bull market, pretty much everything works, and as far as outperforming the market, it's the best way that I have found to outperform the market is to use the leverage of options. And if you aren't familiar with that, then it's definitely not something you want to start just on the fly trying. You definitely want to learn about options and how to. I would recommend paper trading them first, but the point is, this market continues to work and continues to move higher, and sure, we're coming into what looks to be like resistance or what could be resistance, but only time can tell and price will tell us if it's resistance or not. But one thing I do know is that eventually, whether it's at 13.11.25 or 13.60, we will have some type of pullback. The higher we go, the better chance it is for a more severe pullback, which will be healthy and should be bought on weakness. So for now, you definitely want to stay long. The trend is definitely still higher, but realize markets don't go up forever, and eventually there is some type of selling activity that's going to overpower the buying, and we're going to see more downside. So for right now, the S&P looks good. We continue to grind our way higher, even on Friday, and we're looking at 13.15 to 13.30 or so on the upside, with an emphasis on 13.25 and basically current highs 13.12. So if we do start seeing some selling pressure, don't be surprised if there's some type of acceleration to the downside, but also don't be surprised if there is buyers on weakness. What that shows you is a lot of people are underinvested and they're buying any dip. We've seen this before, especially the rally from 2010 summer lows up to basically the beginning of this year. Every dip was a buying opportunity, and frankly I wouldn't be surprised to see that again. However, we do have some resistance to deal with at basically the low 1300s. So let's look at the zoom in a little bit, see what's going on. Okay, see what's going on a smaller chart. So on a 2-hour chart of the S&P, I'm going to zoom in just to this last month, and we definitely have support at the lower end of the range. And if we do get some type of pullback, it should be below 1300, which were basically the most recent lows. I would look for 1288 on the downside and then potentially back down towards 1275. In that area, that should be the sweet spot, and that's where you should want to be buying this market. However, if this thing keeps grinding higher, it's important to manage your risk, whether it's the most recent swing lows or however, and realize how much money you have at risk. So overall, the S&P looks good. As far as the NASDAQ, new highs, relative new 52-week highs. This is great. This is what we want to see. But, like the S&P, expect, some type of potential for a pullback. If we do, you'd be looking at the point of control for January around 2370, but a pullback down to the low 2320-ish, that would be a great opportunity. However, look at 2370 first. You saw my background there. The Dow up at the value area high for the past 52 weeks. Just like the NASDAQ and the S&P, if it continues higher, continue to ride it, but know where your risk is. And on the Dow, if I zoom in, we have some light volume up making new highs. That's good, but it's important to manage your risk. And if we start making any type of lower lows or pierce, for example, this last low, if we start piercing that, then you look to definitely scale out and look to reload back down towards the lows of January. So looking at some sectors, and like I said, if you're long this market, you should have stocks that are working. If they're not working, then maybe that's telling you something, and maybe you have to reevaluate where you're long, what you're long, and find a better name. So XLB, this still looks good. It looks like we're definitely getting a pause, and there's more consolidation to be done. However, you can see just from momentum, any type of pullback should be bought. And if we get a real pullback back down towards basically below 35, and we're really looking at the 34.80 level as a potential long, and the reason why is because, let me fix. We have point of control support for January at those levels. We have value area for the last 90 days at those levels, and we have nice high volume for the past couple of months at those levels. So right below 35, I would be looking to get long the XLB if you aren't already. XME, this is still stuck in a range. It's not breaking out. It's definitely the underperformer. However, things can change, and the XME can turn to an outperformer. Think of it like this: if any type of QE is announced by government, by the Fed, let's zoom out one. Remember when Bernanke announced QE2, we had this type of move. So if we do get that same type of setup, realize the last 2 years, point of control, we're right at those levels. What should we expect? Some type of move up to at least 58. We'll test those levels. If we can break above that, we should go test mid-60s to basically 70. That would be your target to the upside. Looking at it on an intraday chart, 2-hour chart, we're definitely in a trading range from around 55 down to 48. Any type of weakness looks to be the right time to be a buyer, and I would be more reluctant to be a seller because the market's heading higher, and we're looking to buy things on weakness. If XME, this is a sector that you want to be involved in, but you want to realize that it's not performing. We're still stuck in a range. Energy, XLE, I'm going to zoom back into the 1-year chart. This looks constructive. We're getting a higher base and, consecutive higher lows, if that's how you want to draw it, or you can draw it like this, however you want. That's not the point. The point is we're close to the highs and we're close to a potential breakout. I would look at the top of the value area, around $78 on the XLE, for a potential move. That's not a bad move. That's a $6 move on a $70 issue, so it's something to be aware of. Like we were saying, the high base, we zoom into January, and it's confirming that high base. We have a low and a complete rejection, back trading to the top of the channel, top of the range, I should say. And I like the fact that this point of control, we have a huge high volume here. This is something that you can be long, and I would keep a stop either below those recent swing lows, maybe below $70, the psychological level, or perhaps if you want to have it really tight, just below $70.50 or so for XLE. OIH kind of looks like XLE basing. I'm going to bring in the intraday chart because that's what really tells the story. We're failing against December's point of control, but I want to be a buyer on this because the majority of the volume recently has been below us, below 120. So if you can get this around 120, 119 would be very ideal, but I don't know if you'll get it. But the great thing is you can have your stop right around 116, 115, and you'll know if it's right to be long or not. XLI, industrials, this is right at the point of control for the year. I would watch out for some type of selling pressure, but realize that that should be a potential buying opportunity. And the reason why is because, you know, typically I would be bearish of this formation if it was on a shorter term chart, but because there's been so much trading activity, I look at these levels, this $36, $37 level, which should be some type of resistance. I see that as basically just levels to be aware of, and not necessarily levels to sell off of, rather wait for most recent price action to tell us if we should be selling. And from now, we're definitely still in an uptrend. I wouldn't expect this thing to go to the moon and keep traveling. I would look for some type of pullback between $35 and $34 as a potential opportunity, with the stop right around sub 34, but around 33.5. So industrials, I still think they work. Stick with the ones that continue to make new highs, and just keep riding them higher. Financials, still strong and still working. However, this $14 and call it 20 cents, it may be some type of resistance. We have a swing high back at those levels. You can see the volume right above that. There's no volume. Well, there is, just very little. And then up towards around 1470, that's where volume starts printing again. So if we break above, call it 1425, we should jump another maybe 3 or 4% before we see some type of selling pressure. But on the XLF, you do want to be a buyer on weakness. Bringing in the intraday chart, point of control for January is up at 13.1775, I should say down at. So that would be a level to be watching. If it breaks below that, then we should go and test the low 13s again. Probably 13.20 or so, where you want to look to be a buyer. Consumer discretionary, this is at the top end of the range. Just watch it and realize that there could be some potential selling pressure. $40, that's your number, that's your line in the sand. Actually, $39 to $40, but an emphasis on $40. We're looking for support there, if you know, to be a buyer. Consumer staples. Really, this is one of the more constructive patterns, in my opinion, because we have gotten a pullback recently, and we're looking for if this thing continues higher. And obviously, consumer staples are slow moving. If they start to sell off, or I should say underperform the market, that should be a good thing, because that means people are going into more riskier assets or riskier underlying. So we are at a pullback here, and we are catching a bid. If you're looking at the intraday chart, we're holding December's point of control, sitting at January's and the composites point of control. So there's a lot of volume being printed here. If this thing starts to sell off, I don't think that's necessarily a bad thing. I think it means that you just need to shift your money out of consumer staples into some riskier assets on weakness. Utilities definitely selling off. They are the leader of the sell-off, if that makes sense. But we are at we're at the bottom of the channel. This should be some type of support value area high for the year. You can see the resistance that's been here for the better half of 2011. We get our breakout towards the end of the year, a test of the breakout, and then continuation. I'm really looking for $35, which I'll show you on intraday chart, to be resistance. And the reason why is because we broke out and basically tested the $35 level, failed in my opinion, and now we're going to test it on the upside. Look for some selling pressure. If that's the case, you should be looking to sell with those sellers and try to reload back down towards sub 34 but above 33. XLV, healthcare, this continues to work, but recognize that we had a nice move back at the beginning of 2011. And what did that lead to? It led to consolidation, not much opportunity, then a huge sell-off, and basically a retracement of the highs. We are in an important area because there's not much volume up here recently. We could see a pullback down towards 35 without a problem. That's about 2%. And then from there, there's no volume for a pullback, back down to 34. So there's potential for a decent sized pullback in healthcare, especially considering that the run that many of these stocks have had. And the last sector I want to cover is technology, XLK. At the top end of the range, hard to say anything else. Kind of looks like the NASDAQ 100, except for it hasn't made new highs. You're looking for any type of pullback, especially towards 26 to get involved. I do think that the XLK, I think the entire market continues to move higher. Stick with what's working. It's pretty easy to find what's working and just judge your entries based off of how much money are you risking in dollar terms, and what is your reasoning for placing your stop there. In this case, my reasoning for placing a stop at 26 on XLK is because if it gets down to 26, not only would I like to be a buyer, but I would like to be a buyer because I can set my risk profile so tight. I only have to risk about 1%, maximum 2%, to see an upside of potentially 8 to 10%. That's hypothetically speaking, but I hope you get the point. So realize that the trend remains higher, but the potential for a pullback with every day that the market continues to move higher is greater, and the potential for that pullback to be significant grows. So realize this week we have the Fed, and they're going to talk about QE3, and they've discussed, they've announced that they will discuss it and talk about the possibility. If there's any inclination that QE3 will happen, this market will probably catch, be a nice rally. It will probably be a bounce. What I think it may lead to, and this is just kind of a shot across the bow, if that's the right way to put this. Back when we started rallying in the summer of late summer 2011 or 2010, sorry, we had a nice uptrend, and then we had basically like a blow off top and consolidation and more upside. I wouldn't be surprised if we get a similar setup where you get a steady uptrend. Let's say QE3 is announced and they're going to do it, whatever. The market's probably going to do one of these, overshoot to the upside, and then we have a consolidation, for say a month, and then a restart of the uptrend. So anyways, I hope this helps. I hope you're doing well with your trading. You should be, especially if you've been following these videos. We've had a lot of winners. I talked about, if anyone followed along with Walter Energy, they got paid off huge on Friday. Continue to ride this one, looking for $70 to $75, maybe even $80. You just kind of let price action determine when you should start scaling out. But I think on any weakness, this should be bought. And really, that's it. Watch out for Apple's earnings this week. That could be a big tell of the NASDAQ. I do think this is a buy on weakness if that happens. But realize that, if there's any type of disappointment in Apple, then you're looking back down towards 380 or so as a potential buying opportunity. So anyways, hope this helps. Hope it gives some type of strategy for you to build off of. Hope you're trading well in 2012. And I will see you on Monday.